Welcome back, folks. We got the S&Ps off 1.3% right now. You got the gold contract down $163. We got some volatility, and to talk about some of the market action, we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30 Eastern Time. Put him on your calendar, folks. And you can reach Tim at his website, ord-oracle.com. He's the author of the Ord Oracle, and he's got a couple great webinars as well over at the TFNN website. Right under the Services tab, he's got the secret science of market tops and how to identify the market tops, as well as 6 secret ratios every trader should know. And we talk about some of those ratios here with Tim a couple times a week. Tim Ord, good afternoon.
Yeah, good afternoon. Anyhow, first thing I want to do, the first page here, this is where you can find me. Sometimes, for me, I have to see the address. So somebody tells me the address, I didn't register. But anyhow, this is my address, www.ord-oracle.com. And my email, you can get me at this email right here. And this is on X or Twitter below. So I just want to pass that on. So
awesome.
Let's get to the kind of where we are. This is the first one here is the 2-day average, the third window up. Actually, let me get my drawing tool here. Do a different one, blue. This is the 2-day average of the trend. And I talked about the trend quite a bit. This is a good indicator to find panic in the market, and panic only forms in lows. The 10-day trend up around 1.2 is the best intermediate time indicator. They usually find kind of intermediate term lows that can last a couple of months or even longer. The 2-day trend is obviously a shorter term type indicator because it only takes in 2 days. And right now, when I made this chart, it was coming in 1.26. Anything above 1.2 shows panic in the market. So even though we're down today, over 1.3% or better, the trend's coming in. When I made this chart, 1.26. So I don't think at the moment the potential pull of actually the bigger consolidation starting. I still think there could be one more bounce up because the 2-day trend's in bullish territory. And I marked the times previously when this 2-day trend happened. Goes back to, looks like about August of last year. So a good 6 months back. And all the times that 2-day trend got above 1.2. And again, we're at that stage right now. So I think there's still one more bounce up. On a bigger time frame, this window right here is the SPX VIX ratio, and it's showing a divergence. In other words, when the ratio's making lower highs and the S&P is making higher highs, this picked out the February high of last year. The market pulled back. We had another time in looks like about November. We had higher lows. We had a kind of a minor pullback. This divergence has actually been going on since it looks like about December sometime. And we really haven't hit a higher high. I think this day right here is actually a higher high. But I thought we might be one more time up to test the upper Bollinger Band. And I still think that's a possibility. If it's going to happen, it's going to happen within the next week. If not, then I think we may start the consolidation. So I'm kind of waiting for one more bounce. If it happens, it's going to happen between now and mid next week, or possibly late next week at the very latest. So I'm still long.
It is cool, not to kind of jump in, but that VIX, it's remarkable. And today, of course, is spiking higher. But,
yeah.
On a daily basis, as this market, we're not quite at highs, but we're pretty freaking close, right, Tim? And we just, every time that VIX, it was like 13, and then we're sitting at 14, then you're sitting at 15, we're at 16. Yesterday, we're at 17, so it's remarkable. And I love how you show it on the charts, that SPY VIX, because if you just pull up the VIX, folks, you'll see what that chart's showing you, which is since December 24th, nothing like Christmas Eve, you were at 1338. And the market's done pretty well since then. And now we've been shopping around between 16 and 18, right? Kind of.
Yeah.
Is that a good way to think about when you talk about those ratios, Tim?
Yeah, it is. It is. Cool. So even though the market has virtually gone sideways mid-December, I mean, it's gone up down a little bit, but really it's gone nowhere. And that VIX or the VIX is going higher. The SPY VIX ratio. The only reason I do that is because the VIX goes up, the market goes down. So to reverse that, I did the ratio. So it's just easier to visualize how I do it.
I love it.
So
my dad and I used to talk about the power of the ratios, and I love how when you just understand them, folks, which Tim does a great job, and that's, it makes a lot of sense to me, even more than, it's technical, but it makes a lot of sense. When you have a market, it just could be an indicator, and you put it on those charts of, hey, and quite a number to consolidate at, right? We're basically chopping around near almost 7,000 on the S&Ps. So while we were doing that, the VIX just kept creeping. Yeah.
Yes, yeah. So it's trouble is the only thing bad about this ratio. It warns you that you're going into some sort of a high. It could be a minor high. It could be this was a minor high back in. This was a decent high. We retraced 14%. This was probably about a 5%. I think the one you're going to see here is maybe a 5% decline. But I don't. But it does warn you. But it doesn't give you doesn't ring at tops. It's find out. It's hard to find indicators that ring the bell, I guess you might say. Okay, there's the top.
Yeah.
They kind of just...
But it is interesting when you pull up that, because that was the tariff volatility. So, that VIX market was paying attention, that the VIX started going up a little bit, even though the market hadn't pulled back yet when we were preceding the tariff volatility. That's what that shows there prior to that number. Yeah, for that April pullback, right?
Yeah, the April pullback.
It's pretty cool.
So anyway, so here's what I think may happen. This is the SPY. It's a daily chart, but every time you get above the upper Bollinger Band, I can take this chart back further. You can see a bunch of other examples, but I think that's what may happen here. In other words, you get above the Bollinger Band, a lot of times, that's that consolidation right there. I thought we might get up to that upper Bollinger Band, which is right around that on the SPY, around 700. On the SPX is 7,000. So I'm thinking that could happen. If it does, I'll get out of my long and get short. But I'm still actually long right now. So I'm not a bull. I'm just kind of looking for if today's 2-day trend was around 1, I'd be out of this market. But it's up around 1.2, and so I'm thinking, there's still probably one more bounce. But that's my take on the. So let's get into the gold market, which is a lot of people have interest in. So I'm long the S&Ps. I'm kind of bearish, not a huge. I think this year will be an up year, but I think we're just looking for a minor pullback into probably a March low of some sort, then back up after that. So not a long-term sell signal, just a pull back in an uptrend. So we'll get to the metals next.
All right, folks, we're going to take a quick break. We'll be back in 3 minutes with Tim Ward. We're talking some metals, and we got markets in the red. S&P's off by 1.3% right now. NASDAQ off 471. We got the gold contract off $157. We're coming back with Tim, folks. Stay tuned. Welcome back, folks. We got some volatility, markets in the red right now. We got some action and yields as well, with the 10-year sitting at 4.1. We're talking with Tim Ord, folks. Remember, you can reach Tim at his website, ord-oracle.com, and he's got 2 great webinars over at TFNN, right under that services tab. You order those webinars, folks. They're right on your account page. You watch them as many times as you like. All right, Tim, on to metals. We got a little metals day today. Inquiring minds want to know. What do you think? Let's see it.
All right, this is bullish percent index for the gold miners index / GDX. This chart goes back to 2014, and anything below 1.0, which we actually are right now, we're 0.84 be exact. But I put an RSI with this indicator, and when it gets down below 25, last week we hit 23. It's gone up since then. Right now we're around 42, but it gave a buy signal last week. The market has bounced up, but valuation wise, anything below 1's bullish, and blue lines here are times like this blue line here, and actually this one right here, this light blue. But those are times when RSI got below 25, and where that correlated. This is a weekly GDX down here, and so it gave a bullish sign last week. And all of them, the previous ones, worked really well. At worst, the market went sideways, but all of them at least bounced some. And so we're bouncing, nothing real significant. But this indicator is bullish, and it does a great job. This next chart is a 50-day average of the up-down volume for GDX. So it measures You got more up volume than down volume. That's bullish. You do a 50-day average, and anything above zero, the market's in an uptrend. All this blue area here is when this indicator is above zero. And that's what happens in uptrend. So you got, it's a bigger indicator. 50-day average is like 2.5 months of data. So it doesn't attempt to pick out all the wiggles in the market. It just attempts to get the major move, I guess you might say. Yeah. So this indicator is definitely in a buy signal. We're in plus 32 right now, or plus 13. Anything above zero is bullish. So this indicator is not even near a sell signal. This is kind of an intermediate term type indicator. I'm kind of rushing here a little bit because I want to get to a conclusion. This is the same indicator, but it's on an 18-day average. So that's like 2.5 weeks. And anything above minus 10, this indicator works best. Anything above minus 10 is in an uptrend. And this, I took this back a couple, looks like about 3 years or 2.5 years. The blue area is times when this indicator, both indicators are above zero or above minus 10. The next, this is advanced decline 18-day average, and the bottom window is the 18-day average, the up-down volume. And both those indicators are above minus 10. That's the reason why we have a green tan area. When it's pink, it's when it's below zero. So it picks out this minor declines, but right now is in a major uptrend. There's not even close to a sell signal here on a 2F. So the shorter time frames are even staying bullish. So let's look at another indicator. This is a cumulative. This indicator goes back probably 2019. And this is a cumulative advanced decline and cumulative up-down volume for GDX. So kind of another bigger indicator, kind of manipulating the indicators in a little different way. It had to have a little different look at the market. And it gave a buy signal. Looks like it probably late March, early April of 2024. Remains on a buy signal. The buy signal is when both those indicators close above the mid-Bollinger Band. And so this is current. We're hugging the highs here, even though we did pull back here a couple of months ago. Internals remain bullish, and so it's on a buy signal again from April. So this indicator is not giving any signs of weakness yet, so it's still in an uptrend. So let's get down to the nitty gritty. So what's going on in the short term here? The week of, I think it was January 26th, we had a bearish engulfing pattern. That's the candlestick pattern where you gap above a previous candle and you close below it. A lot of times that kind of halt the market. What's probably going to happen, though, is we're going to rally back to the old highs, which was, I think, 113 on GDX, and that's the January 26th high. That may find resistance. To get through that high, the weekly volume needs to get up around 250 million shares. If you test the previous high on 10% lighter volume, it's going to be resistance. And I doubt you're going to have 250 million shares on a test of that January 26th high. It's probably going to be lighter. And so you're going to probably just go sideways here. Not the bottom's probably in because you get that test of 1st of February of the January 26th low, and you can see the volume was way probably 30% lighter, maybe 40% lighter. That was support. Can't get through that low. If you can't get through the previous low, they'll try to take out the previous high. Well, the previous high is, January 26th high. And so if you go up there and test that on a lighter volume, 10% lighter volume, it's going to be resistance. So you're going to flip sideways most likely. But that'd be it. I'm long GDX. Am I going to trade this thing? I'm not sure yet. Depends what the volume is. But I may just keep that position because all these other indicators, this one, that one, this one, remain bullish. So sometimes you can take yourself out of a trade and you wish you never did. So I'm kind of contemplating. I may suffer, I guess, to hold that position to 113, and this low I think came in at 93. So I may suffer through that pullback just to hold on to that longer term position because the bigger trends remain bullish. So I may change my mind, but sometimes you get too cute and you change. When you get these big multi-year rallies, which I'm thinking is happening in GDX, sometimes you just want to stay long that market. And I'm contemplating about staying long that market because the internals are doing fine. A lot of gold stocks may consolidate, but you're not going to consolidate where the market's going to retrace 50% of its up move. This one is going to retrace maybe 15% its up move. And that may not be worth it for me. If I had a 50% retracement possibility, I'd definitely be heading for the exit. But I don't think there's a big decline. I think this last low around that 93 is going to hold, and in general, we may just move sideways here. And most of these gold stocks, the big ones are going to take a rest, but there's the small ones are coming up. The mid ones, mid tier are doing fine. So I'm thinking I just may stay long this market. So,
and can I ask you, because I get questions in terms of emails, even just from Gold Report subscribers, and it's a tough one right now. There's a lot of traders out there that have a lot of profits in the GDX, right? Yeah. And they're bullish, and I think the dollar's going lower really this year, which should at least not hurt or help, however it plays out. But they say, man, where do I put a stop in? I don't want to get stopped out, right? Is that something of a level, or are you just kind of riding it and you have a risk factor that that you're there, or maybe those recent lows? How do you look at something like that? Because there's a lot of people in that position right now. It's just been such a run and we got such volatility. How do you look at that? Or you just keep looking at it and tell you what the signals and then they change?
Right.
Is there a level there? How do you look at that?
It's just actually how that low is going to be tested. I actually don't use stops. I watch my stocks real closely. And if something doesn't act right, I just sell it. But I think if you got a good position, I don't think the market's not set up for a big decline here. I'll put it that way.
I appreciate your analysis, Tim, walking through the charts as always. Folks, check it out, ord-oracle.com, and those 2 great webinars at TFNN. Tim, thanks so much. We'll talk to you on Tuesday, man.
All right. Thanks a lot.
Thanks so much.